Hello, everybody, and welcome to Street Smart Investing. I'm Albert, and I'm here to talk about the next stock that is on the list from the custom portfolio that I've created. And it is, I know the symbol, I just don't know the name, so sorry about that. It is, I believe, CSS, and it has to do with like home building or real estate, something like that. So we'll look into that and we'll start that stock and we'll compare it against basically my selection versus the top earners selection. So it's like my selection, which is cheap and pretty good and still growing, versus the best stock for that sector. So let's begin. Today is December 6th, the year 2020, 7:41 p.m. And again, I'm not a licensed investor. So if you're going to invest into the stock market, please consult a professional or financial advisor. Every single decision that you make is solely based on your responsibility and your accountability. So, again, it is your final decision as to any gains or losses into the stock market. I cannot make any recommendations. So, this stock is for your education only. The only thing I can do is recommend for you to have it on your watch list. Again, you can see my opinion and form your own opinion, because I do post stocks that I like and stocks that I don't like. So again, no recommendations, just for you to learn and, process the information and just giving you some feedback on the stock market. So let's begin. It is not CSS. I think it was CCS. There it is. This is the stock that I am reviewing. So let's begin. Company is called Century. Let's read a little bit about it. Let's do that first and foremost. So, Century Communities Inc. engaged in the development, design, construction, marketing, and sale of single-family attached and detached homes. And again, this app that I'm using is Webull. Company offers attached and detached homes in metropolitan areas. Those are the names of the cities. Company's home buildings operations are organized into 6 segments, including those cities and many other projects. In addition to building homes, it's also responsible for entitlement and development of underlying land. So basically, they buy land or attached homes for sale on the acquired land. Basically, they buy land and they want to turn that land into construction, and that construction is homes. Single family homes, to be exact. So there you go. That's the sector, but this is another this is like the secondary sector. So I know some people might say, wait, but hey Albert, you have like 2 sectors or 2 industries, but you're talking about the same stock. So which one is it? Is it home building or home building in-house goods? So, this is the primary sector and that's just the secondary sector. So, it's pretty much the same thing. So let's begin. I'm going to click on the 1 year. And let's start with that. So it is at $43.05. Market cap is at 1.44 billion. PE has a low PE. Earnings, that's a really nice number for earnings. And this stock is pretty undervalued. Again, from my expectations, again, this is not advice, but from my expectations, anything under 15 PE, 15 is usually a fair value. Anything under 15, that's what you want to get. So it is undervalued at this time. I know they are not offering a dividend, so they have no yield. Again, months ago I used to write that on the board, so if you see my channel, you know exactly what I'm talking about. There's certain there's only certain information that sticks out to me. So again, earnings are really, really good. No dividends. The beta is not showing anything. Basically, that's like volatility. That measures any volatility. If it's like kind of up and down, or yeah. So that's what beta means. If you guys don't know that, free float, how many shares for that stock, and that includes. Well, one includes insiders, and then the other one includes like just regular investors without the insiders. So it's always the one that's less is the one that includes without it. And again, for long term, I love to use the 1 year. It gives me a good baseline and a good guideline as to what I'm looking at. What can I expect? What can I see more or less heading into the future? As you can see, everything in March was pretty bad. It's gone up, and it's beaten its previous. You can see like right there, it's beaten its previous high, and that looks good. I like that chart. Nice looking chart. So yeah, that looks good. So let's go to any quotes. I don't really look at that because a lot of people think they know everything, and if they don't, they think, I don't know. I just don't use it. Some people think it's like the biggest thing in the world, and to me, it's useless. I have a different method. This is okay. I like to look at it every once in a while. But again, I don't know how accurate this is because it doesn't show a date. I know it's used probably pretty recent, either for the day or for the week. But again, I don't know how long ago it's been refreshed and updated. This could have been Friday's results and today's Sunday. So I want to already see by tomorrow, Monday, I want to see like orders for Monday. And that's what I'm saying. I don't know if it might show the order flow for Monday or if it's going to be still stuck on Friday until the opening bell. Then all of a sudden this might change. I don't know. I just kind of look at it every now and then, like I said. Large scale orders. Okay. Yeah. So the news. So this, no, hold up. Okay, so any news? Simply Wall Street has that. Comments I don't care analysis. So there you go. Some people like analyst ratings. I kind of look at it just to look at it. I don't really care about analyst ratings because everybody seems to be an analyst, and I guess that's what people like doing nowadays. But again, I've said before, I believe in my work. I believe in what I do, and when I believe in what I know. So again, even in my section when you read about my channel, again, I still believe I'm highly accurate, and I make good selections, and I provide the information because You know, it's not like I talk about something without proving information. I'm actually showing you the information and how I get my answer. Um, I show you how I get the answer, but again, I can explain more into detail, but again, I just don't have that kind of time. And also, it's just enough information for you anyway. So again, this is the opening and that's the close. So as you can see, there was a lot of buying and it's gone up throughout the buying. So that's a good sign. Average cost from that day, last Friday, was 37. Closing price was 43. So that's the $6 difference. So yeah, you can see that. Moving on to the next. That's a guideline for the chart. Again, I don't use the support and resistance guaranteed like off of Webull. I use that as a guideline, and I use other sites to verify. Again, like, it's a good guideline, but again, it's not my final decision to use that as my guideline. I got to compare with other sites and other info that I have that I don't like to release when it comes to my I don't day trade. That's the funny thing, but I could if I want to, but I just prefer not to. I don't have the time. I work for a living. But again, I know how to short term trade, you know, swing trade as well. You know, when I say short term, I mean I include, well, what I mean is also day trading as well. But I just can't. It's just too high risk for me. It's not my style. I like swing trading a little bit more. I mean, I wouldn't mind trying it, the day trade, but still, again, I don't use that as a guideline. I like set things up first and stuff. So again, press release. Any insider activities that have been buying? Nothing. Probably that has not been updated. So the last time shares were bought in 2017. Yes. Okay. Next up, this is the information that I want to present, but I'm showing you guys anyway. So they beat earnings. Boom, 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 boom. Lovely. I like to see those gaps when the dark blue's on top. That's always nice to see. All kinds of investors love to see that. Public, private, any, you know, banks and central banks and all that. All kinds of investors love to see those earnings and the revenue rise as well. That I'll skip. I'm not going to get into that. I'm going to keep it simple. So again, I'm going to skip that. This is important. I'm just going everything that's important. Everything that's important. Net income. I like that. Again, I don't have 2020 results for you, but I do have 2019, and it's still a good comparison. Hopefully by the start of January, 2020 results will be posted, and 2015 you know, statement, that info statement will probably be out, and it'll be from 2016 all the way to 2020. So revenue has grown. So from there to there, 18%. I don't look at that yellow line year over year. That could change dramatically at any time, at any given moment. But for the year, that remains the same. That looks good. Operating income and balance sheet. And this is what I mean. If you work for a living, you should understand this. Anybody should understand this. I'm gonna keep it real basic. Net income is an income you get after taxes. Total revenue, that's like saying on your paycheck, your gross. That's everything before taxes. So, let's say you received a raise. Yeah, you're getting more money. But again, that's before taxes and all those deductions, all those numbers that you know, that haven't been subtracted. Like, for example, I'm going to compare it to, again, your paycheck. You pay medical insurance, dental, you pay 401k, You might pay out for to take for a sick day. You might pay for a union. You might pay for I don't know, just everything that you need, whatever benefit that you have that your job or your company offers. So again, those are all the deductions included that has not been taking place. Um, so again, when it comes to revenue, so again, revenue is the same as saying your gross income, and net income is after tax. Now, operating income, that's pretty much okay. All the money left over that you get, what does it take for you, for your upkeep and your needs for you to survive as a human being? So obviously you got to pay rent, you got to pay either mortgage or your car and your car insurance. You got to pay for food, you got to pay for gas, and those other expenses. Those are just basic expenses, just for your daily living, like you just don't realize it, but that's pretty much it, your operating income. In a way, it's good that it does go up, because if it is going up, for the most part, you should be earning more to keep up with higher expenses. Now, again, when there's certain things that are paid off, or or if you don't think you're going to be paying off anymore, for example, once you pay your car off, you're done. That's not going to be expense for you anymore. So your operating income still goes up, but you save that cash. So that's pretty much what it is. So anyways, moving on. I thought I'd throw that out there because I haven't stated that in a while. I like kind of repeating myself so people, newcomers can grasp that information and keep that in mind. You can see total assets, that's good. Liabilities. I know it looks kind of blurry when I keep zooming in, but yeah, sorry about that. I just want you guys to see that. That I don't like that jump in debt. I don't like that jump in debt. That's kind of close there. But again, after 2017, they've gotten better. So as you can see, I like those numbers. It's funny how just by looking at the bars, just how separated they are, I can just tell if it's good or not. Not even looking at the numbers here at the bottom, just by looking at the bars and the total numbers there. So cash flow, operating cash flow is in the negative, but that's in the negative. So 105 million. So there you go. This is the info that you want. So for my selection, they have 54% debt. They still have a good return, 15%. I don't know. Again, I don't know when this was last updated, but out of 26 companies, that's not bad. Ranking in 9th, and you have ranking in 18th. PE ranking in 6th. I mean, for this, looking at the PE, honestly, I don't care about the rank when it comes to PE. I look at the number itself, and that's what I care about. These two I care about when it comes to the rank. Price book, I don't really tend to care about it. The book value, I don't tend to care about it. This I care about. So, yeah. So, earning of 5.03. That's nice. That is really, really high. And that's really, really good though. So, do not show app on top. Turn off messages. Leave me alone. Okay, so sorry about that. So let's compare it with the number one home building stock, and that is NVR. That is too high. Let's see. So NVR, wow, book value. NVR. What is NVR for the PE? We'll see that soon. Price book, I don't really care. Return on equity, so return on your investment was NVR. I do not see it. Oh wait, yeah, duh, on top. But I was just looking at the numbers here real quick for the returns. They seem pretty close to each other. Nothing's really like way off. Well, after C21, 22, then these two, they're just demolishing everything else. LGI Homes and NVR. So NVR seems to be a big winner here. I do not see NVR on the dividend list. NVR, I don't see them for debt. So let's see something. NVR 46. So let's compare NVR. Whoa, this is exactly what I'm talking about. Yeah, that's even worth more than Amazon. Earnings per share at 217. So again, this is why I recommended my cheap stock. Yeah, that price tag is insane. You can basically buy so many shares and invest in so many companies. Wow, that's just insane. I don't even think 10%. Well, I wouldn't even say, I don't even think, if you were to buy my portfolio, one share of the portfolio I requested, that I know for a fact that it wouldn't even be that amount. It would not even be that amount. You can create a portfolio with that amount, honestly. So anyways, these numbers are insane. I don't like the company just because of that price. So anyways, I'm gonna give it to you guys like I promised. Earnings per share 217, market cap 14.88 billion. So no dividends, PE ratio of 18.43. The 1 year chart. So it went from let's see, it went down to, I can say about like right there. Let's just round it off to 2,126. All the way to, that would have been a nice ride if you bought it at the bottom and got it and then sold. But I mean, again, that's something that you don't want to hold for the long term. That's just, see, it's falling flat. You see how flat that is? Like, if you were to draw a line there and kind of like right there, this, yeah, like it's kind of flat. It's not, I mean, I know it goes up and down, but again, it's not like trending up or it's not trending down. It's just kind of flat. See, I like that. It was going up, but again, you see, it's been flat since so that's July, August. So ever since August, it's been flat. Inflow and outflow. You see that little outflow. News. I just don't like it. Too expensive. Analyst ratings. So you can see it's been a lot of buying. On Friday, there was a lot of buying on Friday. That I don't like. So that, see, well, it looks like it's slightly going up. I get it, and that's the 1 year trend. If you were to do a short term, I would start with the 3 months. I would start with the last 3 months, starting with short term. And again, you could see that line clear, those little dotted lines. So there you go. It looks kind of flat. And then, yeah, I'm not fond of that. So we have they've beaten their earnings, which they should be, because if they miss earnings, forget it. That's a roller coaster ride. This is definitely a roller coaster ride I do not want to be in. Okay, so that I want to skip. That I'm gonna skip. Net income. Is this a typo? 878 million. Oh no, it's not. Okay, my bad. I thought I saw another number. That's all. So yeah, they've been growing. So they grew. Let's see, they grew 35% from 2015 to 2016. Then 11%. So yeah, they've been growing every year. They're too expensive, man. They're too expensive. I don't like it. Revenue, it's good. It's slightly growing. I expect them to do the same. Operating income, all right, that's pretty good. That is the same. Looks around the same each bar, yeah. And then assets been growing. That's good. Debt to assets been dropping, so the debt has been dropping. That's a good sign. What's their cash flow? They have negative 13. I always look at the 2019 values. So 866, 13 million. Wow, they have a shitload of cash. Sorry about cursing. I apologize. But yeah, they have a lot of cash. Wow. They definitely have a lot of cash in the bank. Sometimes this PE might be off, but yeah. No dividends. Overpriced. Slightly overpriced. You know, I mean, when I say slightly overpriced, it's according to this stock in general, just because of the guide that I use. I use 15 as a base for fair value, and then if it's over 15, it's overvalued. You know, between 15 and 20, I say slightly overvalued. Then when it's 10 to 15, then it's slightly undervalued. Anything below 10, it's like a really good buy, and then everything over 20 would be way too expensive. And that I'm talking in general. Just even if even if the price was higher or much lower, again, I don't care about the price. Just looking at the PE, again, in general, just aside from the price and the numbers and the cost and whether it gained 20% in one day or whatever. Not looking at that. I'm just talking about in general about the PE. But again, that's a really nice return number, 32%. That's really good, really high. I can't seem to calculate a fair value for return on equity. I'll probably look into that probably next year and the months coming. But again, it's just hard to determine a fair value for return on equity. It just depends on the stock and the price and stuff. It's a hard number for me to determine. I don't know if anybody else has a guide or a base that they use to determine more or less what's good or not. So again, debt has been going lower. Again, final result. And I usually write the final results in my old videos. I used to do that. So you seeing this live, and I'm doing it. I've been going over 15 minutes, so sorry about that. I'm gonna start making my videos between under half an hour. I know 15 and 30 minutes, but sorry, it's just a lot of information to get out. And I'm doing a comparison video. So again, they've been dropping the debt. That's good. That looks good. That's too much. That's insanely high. So final result. they're just too damn expensive. They're just way too expensive. Way too expensive. Honestly don't know how they're beating earnings, and I think the only way is they're beating earnings is because of the cash that they have in hand. And they can still get away with it. I'd say maybe a year just to be on the safe side, because I don't know what next year is gonna bring. And we'll go from there. But let's just read this. And again, this company, it's gonna drop, and they're just too expensive. Good company, too expensive. I would expect their market cap will be way more for that price. You know, it's just, that's too low of a market cap for them to be that expensive. But anyways, it says NVR is engaged in the construction and sale of single-family detached homes, townhomes, and condominiums. So these are like inner cities. You see northeast of where? Northeast of where? Oh, so they're talking about the U.S. I'm thinking in a certain state. Okay, so it says Mid-Atlantic, Northeast, so Southeast, so basically East Coast. All of the East Coast. Yeah, a lot. I don't know. From what I know, a lot of people are moving out of the major cities and going into suburbs and rural areas. People are moving out of inner cities, especially people around my age. You know, it's just, it costs too much. It's not worth it. Having stuff near you is just not worth it. People are struggling. That's just a reality. We're, again, I said this in my last video and previous videos before. These are not normal times. Whether you like it or not, whether you think the virus is a joke or it's fake or it's not, whatever, that's your own opinion. I gotta respect that. But again, I think we can all agree on this. These are not normal times. The stock market has been insane. It's been choppy. It's been crazy. Whether you like this next opinion or not, I just think it's the truth, but to each their own. The stock market is not the economy. So don't get that misunderstood. You know, things were really, really bad in March. And guess what? The stock market in March, late March, early April, it was going up. And a lot of people started to realize the truth. And that's what it really is. It's manipulative. The stock market can be, again, it can be a joke sometimes because things are getting bad and then we're hitting new highs. It just, that don't make sense. You know, more deaths, more disasters, more accidents, more this and that, more politics, more problems. It's just, it's nuts. Things are just getting worse every year. But I'm not gonna get into that. I'm just saying, you know, things are getting worse. But again, they're dominating the East Coast, too expensive, and I'm not too fond of that price. That's actually more than Amazon, if I'm not mistaken. And let's look at that real quick. Yeah, that's insane. So again, how many shares with $4,000 can you buy with CCS? So with $4,000, let's do a quick math. So $4,000 divided by $43. I just want to show you guys that. So let's just do that. That's why I have the calculator open. Divided by, let's just go with 43. So there's your answer. You can buy 93 shares. You can buy 93 shares of CCS compared to NVR. Compared to NVR. And these are their competitors. It's a small market in this sector, and there you go. If you want to see a video of me comparing all these stocks, I'll keep that in mind. I do have videos where I do the whole sector and I review it. I don't know if I'll be writing stuff down. Maybe not. I think I'll just go over 5 companies at a time when I do the sectors, because writing down is just a lot to prepare. So it's just better on the phone like this. So again, thank you for watching. If you've seen my custom portfolio that I've created, take a look at that. I hope you guys enjoy it, and stay safe, and Merry Christmas if I don't do a video in a while. I've been busy, but again, hope you guys enjoyed the video. Hope you learned something, and hope you can invest safely, wisely, and accurately. So thanks for watching, and I will see you in the next video.